This is your LMAX exchange technical update for Thursday, August 18th, 2016. Euro dollar. So the euro has just broken back above the 100-day moving average in recent trade, which put the short-term pressure back on the top side. There is risk for additional upside towards 114.28, which is that key high from the 24th of June. But ultimately, overall, the downtrend remains intact, the broader downtrend that is, and we could see the market just as easily stall out. Look for a break back below the low that we saw in Tuesday trade, which comes in around 11.78 to put the immediate pressure back on the downside. Sterling dollar. So cable saw a little bit of a bounce in recent trade, but overall here the market remains intensely focused on the downside as this intense downtrend remains intact, and we should see fresh downside below that recent plus 30-year low that was back in July towards 125 next. At this point, only back above 133.72 would compromise this bearish outlook. Dollar yen. So dollar yen looks to be poised for a retest of that recent 2016 low from June at 98.99. A break below will accelerate declines and open the door for a move down towards next key psychological barriers at 95. At this point, only back above some recent resistance at 102.65 would take the immediate pressure off the downside. Euro Swiss. Euro Swiss continues to chop around, and we're going to need to see a break above 109.45 or back below 107.78 for clear directional insight. Aussie dollar. So Aussie looks to be topping out after stalling shy of the 2016 high at 78.35, stalling at 77.58 ahead of this latest reversal. At this point, look for additional declines over the coming sessions, with an acceleration seen on a break below some key support, which comes in at 74.21 from that low on 27th of July. Dollar CAD. So dollar CAD has pulled back over the past several days, though ultimately the market looks to be carving out a major base and should be supported down into the 127s and 128s ahead of the next major upside extension back above recent highs that we saw all the way up at 32.54 going back to the 27th of July. Kiwi Dollar. So Kiwi looks to be stalling out after putting in a recent 2016 high at 73.41. Look for confirmation and acceleration of declines if we break back below the 15th of August low, which comes in at 71.65. SPX 500. So the S&P 500 could be showing signs of topping out after putting in a record high earlier this week. The market has been showing signs of exhaustion, although it has been pushing to record highs, and we would need to see a break back below 21.47 to confirm that toppish outlook and accelerate declines. Until then, even though the market looks like it's stalling out, the pressure does remain on the top side, and we could see a push through 2200. Gold. So gold has been consolidating over the past several days, but it looks like the market is looking to consolidate ahead of the next major upside extension beyond the 2016 peak at 1375 and towards the 1450 area further up. At this point, only back below recent support around 1300 would compromise this outlook.